What is up, YouTube? This is the Working Investor. I think I found a little glitch in the matrix of the Bitcoin world where you can get superior return, and then there are distractors that are distracting you from superior returns. This is only my opinion. I'm a retail investor. Don't listen to me. Do your own due diligence. Speak to people who are advisors, financial advisors, accountants, lawyers, mathematicians, whatever. Okay, let me get to the point. So there is something called Bitcoin futures, right? Then there is an ETF called BITO or BITO that trade Bitcoin futures. And basically they give you distributions, as you can see here. These distributions that they've been paying out. Then there are at least two ETFs that I know of. There could be more. One from YieldMax and one from Roundhill that trade BITO. Again, BITO is a fund that trades futures, and there are two ETFs that trade BITO and do options on BITO. So it's getting a little complicated. Now, just by holding BITO, you can just hold BITO and then not do anything if you desire. You don't have to do options, and you get those distributions. Or you could buy these funds that trade the premium, that try to make premium by trading options on BITO and give you dividends. You would think that you do better with these funds, but you actually do not, and I'm going to prove it to you. So far, maybe eventually you will. So I'm not picking on Roundhill first. Let's just start off with Roundhill. So you see here, these are the payments of Roundhill for August, July, and June. And I have everything nice and prepared on a sticky note, I promise. It's going to be very, very nice and cohesive. Let's look into YieldMax, right? So YieldMax, just to make it easy, just for the months, I'm only looking at the months of June, July, August. I didn't do September, even though BITO has a September distribution, because they don't have the September yet. So I want to compare apples to apples. So you can see here, these are the YieldMax distributions, the YieldMax version of doing their calls on BITO. So I did all the math, and these are certain parameters I was comparing. So first of all, before we get even further, just bear in mind that both YieldMax's YBIT and Roundhill's YBTC, which are trading BITO, right? You can hold BITO and make distributions, but in addition to that, if you would like, you can also choose to sell your own covered calls on top of the distribution. You can get the cherry on top. You get a bonus. You could create your own bonus if you'd like to. So you could have it as passive as you like, just hold it, or you could do something and sell options on it too to get a boosted return. I looked into ER when it means expense ratio. So obviously, I don't think BITO has actually, I have to look into that actually. But I think BITO may have an expense ratio. Let's take a look. I want to be correct here. Let's just ask Google. Does BITO have an expense ratio? So it does have expense ratio of 0.95%. So I stand corrected because it is a fund. But remember, the expense ratio of YieldMax is 0.99%. And the expense ratio of Roundhill is 0.95. Now, these expense ratios are their expense ratios that's on top of the expense ratio of BITO, because they have to pay, the expense ratio is the fee that's built into the fund. So you're getting double hit with expense ratios because an ETF is trading an ETF. Okay. So you're basically saving money on paying double expense ratios. As far as NAV, I just looked for year to date because some of these funds haven't been out so long. So BITO is down 23% year to date. It's trading around, I believe, 17.17. Let's just check to make sure. I think it was $17.17. Yeah, we're all down. So you could see over here, okay, another penny down, 17.16. So it's $17.16. I did my calculations based on 17.17, but I wasn't looking at the September distribution. I was looking at August distribution of $1.44, and I divided it by 17.17. I guess I should have divided by 17.16. That came out to be about 100% yield if you annualize it. And then you had to take away the NAV erosion of 23%. So that gave me a total return based on the last payment of August of 77%. Even if you want to look at the recent payment of $1.20 and you want to say 17.16, let me show you how I do my math. If you have $1.20 and you divide it by 17.16, then you have to annualize this. You have to multiply, that's for 1 month, multiply by 12. So then if you want to use the recent distribution of September, not August, then it's 83%. And then if you subtract 0.23, so it's a total return of 60%, or maybe almost 61%, right? So maybe it's 77%. If you want to use other calculation, you could say it's about 60.1%, right? Let's go down to yield max. Like I said, yield max has an expense ratio of 0.99, which they have to also pay BITO's expense ratio. Yield max has been down year to date, and I'm not even sure they've been even around for a whole year. 34% NAV erosion. They're trading right now $13.61. These are the distributions of August, July, and June, going back the last 3 months. And you could see here for August, they gave 67 cents. So that came out to be a 59% annualized return if you base it off the recent price. Then you have to subtract NAV erosion, and now your total return is 25%. So that's, obviously we know 25% is smaller than even 60%, which is the lower, more conservative model of BITO. Let's look at Roundhill. They have their YBTC ticker. Again, they have an expense ratio, which you have to pay for Roundhill, and then they have to pay an expense ratio. Obviously, expense ratio doesn't come out of your pocket. It's built into the price, but it's an expense that sucks out of your pocket, out of the total return. So they've been down 23%. So I have to say the Roundhill kept up, but I'm not even sure if this fund's been around that long, but so far it's down 23%. It's trading around $37.87. These are the distributions: $1.61, $2.06, 91 cents. Based on the most recent distribution of $1.61 divided by what the trading price it is, and if you analyze it, it's a 42% return. You have to subtract the NAV erosion. So now the total return is 19.5%. So again, 19.5% total return based on my calculation of Roundhill, 25% total return based on my calculation of the yield max, their ticker symbol YBIT, versus Roundhill's YBTC, versus just buying BITO itself. You're getting closer to the actual source, and it's either 77%, because it's a little tricky because they pay the distributions like different times of the month. So, or if you want to say 60%, and this is before you actually sell cover calls against your position. You limit your upside when you sell cover calls, obviously, but you can get additional. I've seen easy 1% return. 1% return. Let me show you. Let me demonstrate to you. Let me tell you why I say easy. Right now, for example, I'll give you a live example. I have 100 shares for $20.08 a share. You can see right here. Obviously, I'm down, right? It's trading $3 almost below my cost basis. So let's say if I want to do trade options, let's say if I'm looking for additional 1% return for the month, right? If I go to September 27, it's interesting how they have a September 27 and then they have a 3 day later, I've noticed, expiration date. But let's say if I want to sell call $20 strike price within the month, I can get $20, 20 cents per share, or $20 per contract would be 1%. This is like almost 2% return, almost 2% return, because it's almost $40. And I could sell it right around my cost basis, even though I'm at 0.23 delta. Even though I'm still 0.23 delta, obviously it depends. Like if you're too far out of the money, you may not be able to sell cover calls for too much premium. But this is an extra, thing on top. 2% extra return per month is 24% extra return per year. 24% extra return boosted on top of your return. Come on, guys. That's 60% return plus 24% return is 84% return. That's pretty good. Or 77% return plus, we're talking about close between 80 to 100% return. Obviously, if BITO comes down, you have to lower your cost basis, So, like I said, some people are scared to do options. And I'm saying, like, why, this is a fund that trades futures. I feel like it's more lucrative to trade this fund. I don't know if the fund managers of YieldMax or Roundhill are doing us a service with their ETFs on this fund when they're underperforming the ETF of the fund. And I argue you could do your own covered calls against it. So for me, it's a complete pass. If I'm going to do any type of Bitcoin futures, not the spot price of Bitcoin, I would rather just go directly into BITO. What do you guys think? Is there anything that I'm missing in my argument and my understanding and train of thought? Why YBTC from Roundhill or YBIT from YMAX is far superior than holding BITO yourself or selling cover calls yourself? Let me know in the comments. This is the Working Investor over and out. Hope you guys are doing well. All the best.